Good morning from London. I'm Anna Edwards alongside Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. The hawks land in Japan as the BOJ hikes interest rates and unveils plans to cut bond buying. We'll bring you Governor Ueda's press conference live this hour as we look ahead to the Fed decision later today. Earnings season powers on in Europe, with HSBC reporting a big beat against estimates and a $3 billion share buyback. We will hear from the outgoing CEO Noel Quinn. Plus, Hamas says Israel has killed its political leader in Iran's capital, Tehran. We'll bring you the latest as tensions rise across the region.
And off the back of that, let's get a quick check on these markets here, because when you look at the futures picture, you are seeing a little bit of optimism in Europe and, of course, some outperformance in the FTSE 100. But look underneath the hood, and that's where you might see those geopolitical tensions really show up, specifically in the FTSE, where you see higher by 0.6%, in line with that Brent crude move, higher by 1.6% as well. We also have our eye on the currency space. You are seeing some strength into the European currencies, but dollar yen is what's catching our eye, a 152 handle as we go into that press conference. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. Just gone at 7 o'clock here in London. Plenty of macro stories to talk about, plenty of earnings as well. And if the earnings stories in Europe, some of them have been a little lacklustre. Today, we've got something different, some beats and some upgrades to guidance. We'll get to those in just a moment. Let's start with the macro. Let's start with the central banking narrative, because, Kriti, we need to recap what we heard from the BOJ this morning.
Yeah, we really do. This is fascinating because, of course, they've raised interest rates. Again, they've hiked for the second time, only the second time, going all the way back to 2007 as well. And they're also talking about having their bond buying, so really slowing down on some of that QE. This is, I think, perhaps one of the most hawkish moves that the BOJ has had. And yet, when you look at the market reaction, how much of this was priced in? A 152 handle on dollar yen.
Yeah, it's weird to think of it priced in, because only 14 of the 48 economists surveyed, they're not the market, but only that many saw a hike coming, although many others refused to rule it out. So it was certainly an expectation that we could see something like this. But to your point, the yen does seem pretty unmoved. We saw the yen gaining in the immediate aftermath of this, as you might expect with that, what seemed to be a hawkish move, a hike, but then it dropped, and now we're pretty much unchanged. Of course, all of this comes just ahead of the Fed.
It does, and this is interesting because we see the BOJ kind of pushing against the grain here, whereas the Federal Reserve is talking about cuts. The focus for the Federal Reserve is largely going to be not necessarily what they do in this meeting, what the decision is today, but what happens in September. Do they start to see some of the cracks that we're seeing in the corporate space and the data actually create a need for a cut ahead of the election?
Yes. How much need, how much comfort do they have in inflation? That seems to be the words we've been using recently. Let's talk about some of the corporate earnings then, Kriti, because I mentioned at the top of the programme that beat from HSBC. We'll get to that in a moment. GSK, though, just hitting the wires here. UK corporate reporting in the drug space. Full-year adjusted EPS, they see that as within the range of 10 to 12%, and they had seen it 8 to 10%. So we are getting an upgrade to guidance from GSK. There had been a question over whether we would see that because of some headwinds they're facing with their respiratory virus treatment for RSV. But despite those headwinds, it does seem they have the comfort level to upgrade guidance. But HSBC certainly stealing some of the headlines with a big beat from them.
I'm having a little bit of deja vu on the HSBC side, because we had this exact conversation with Standard Chartered yesterday, even Nomura, where they're talking about sticking with their buybacks and that increased Asian kind of wealth really boosting their bottom line, when we have this conversation in luxury so often that it's the exact opposite dynamic in that sector. The banking space, though, seeming to really profit out of it.
Yep, so a big buyback, $3 billion, as we mentioned in our headlines. And interesting that in terms of net interest margin, yes, they beat there. Of course, there's concern what happens to these healthy net interest margins we've seen on lots of global banks as rates start to come down. And Noel Quinn sort of setting the stage for that, saying there's resilience in the business because then they're able to build out the wealth management unit, diversify the income streams as a result. Let's move on to the technology story, shall we? Because after hours in the US, that was certainly something to keep an eye on.
I mean, Microsoft really taking the cake here, and this is kind of almost the worst nightmare for a lot of traders here, because this is the perils, Anna, of being an A+ student. I'm sure you can agree with this, where when you continue to perform just right off the charts, at some point that catches up to you. And the fact that Microsoft came in with a 29% growth in their Azure services, their cloud services. The expectation was 31%, and the stock really got punished for that.
Yes.
Despite 29% growth, that is massive. And still, you are starting to see that perhaps this is the start of those cracks in the tech market.
Right, and that's how high the bar is to impress right now in tech. That's where the expectations are. I would say that the stock did, as you say, it dropped, but then it paired its drop, and people seem to be focusing a little more on the fact that if you look at that increase in growth, more of it was coming from AI than previously. And of course, it is up to these businesses that have made a big investment in AI to prove where it's all going. AMD in focus as well. Guidance coming in better than expected. And so there's another area of the tech space we focus on. They're looking to take some business from NVIDIA.
And we talk about Intel as well, wrapping that into that chip story as well, because when you talk about Intel, they're going to restructure at a time when Microsoft, and you're looking at a chart on your screen right now that talks about that CapEx spend. You were talking about data centers, the AI story. Microsoft is sitting on trillions of cash. So is Apple. So is Amazon. Here's how they're deploying it. The problem is, right now, the economy in the States is growing. The balance sheet looks good, so they can afford to have this kind of bump. But this is really playing into those fears. When does the party stop?
Yeah, let's circle back to our top story around central banks this morning, and that is, of course, coming from the BOJ. Let's get some analysis. We have had that increase in interest rates, a cutback in the bond buying being announced, and a timetable, detailed timetable set out for what that's going to look like. Let's talk more with Bloomberg senior Japan economist Taro Kimura, who joins us this morning. Taro, nice to have you on the programme. So if you look at the yen, it's almost possible to think, well, nothing really happened this morning. But we have had another interest rate hike from the BOJ and a lot more detail on their bond buying. What do you think is of most significance this morning?
I was actually one of the minority economists who expected the hike at this meeting. And I was actually saying from its March policy pivot that the BOJ is going to rise in July, because your life's going to be more simple if you think the driver of BOJ policy is simply the momentum in inflation. So in Japan, we had experienced long disinflation and decades of deflation, disinflation whatsoever, and it was hard for corporates to raise prices. But given the big push from import price after Russia invaded Ukraine, it's got easier for corporates to raise prices. And I think the BOJ simply appreciate those significant tectonic shifts happening in Japan's market. So therefore, it was natural for them to raise rates. In the real sense, adjusted for inflation, it's still like negative 1.5 to 2%, and so therefore it has a lot of room to hike. So therefore, I think even in press conference, I think Ueda is going to underscore that the BOJ will press ahead with policy normalization. So probably the yen sellers should be alert to that.
Well, Taro, it's interesting that you mentioned specifically that kind of almost oil import story for Japan via the geopolitics that we saw, because that's going to be a major theme given the headlines overnight out of the Middle East and out of Venezuela as well. But I want to come back to the FX story that you were really talking about. I think this is the first time I've actually seen some of the commentary that they're actively calling out the FX story and calling out the yen. To what extent are the capital flows really getting in the way of the BOJ? I mean, we knew this in the background, but this is the first time I've heard it addressed. Your take?
Right. So I think in the last meeting, the BOJ blurred about. They announced starting quantitative tightening, but blurred about the pace of running off its balance sheet. That said, at this meeting, their QT plan unveiled today was very clear and specific, showing quarterly reduction pace and purchase amount of JGBs. So that clarity will bring enough confidence for Japanese real money, such as insurers or pension funds, to be encouraged to repatriate their capital towards Japan. And I think the flow of capital towards Japan will increase as the BOJ is clearly going forward, hiking rates and normalizing its policy.
Taro, thank you very much. Bloomberg senior Japan economist Taro Kimura, thank you for coming onto the programme and telling us your thoughts post that BOJ decision. We are waiting for the press conference from Governor Ueda, and in the run-up to that, we'll have plenty of analysis of where we are on this story. This is what we've got coming up on the show for you at 7:15, so in around 5 minutes' time, we'll be going to take a deep dive into FX markets. Sonia Martin joins us from DZ Bank. Then at 7:30 a.m., Alicia Garcia-Herrero, Asia Pacific chief economist at Natixis, joins us as we digest the BOJ's rate hike decision and as we work our way through the early moments of that press conference from Governor Ueda. Then at 8 a.m, Morgan Deladon will be with us from Global X ETFs, joining us to unpack all of the latest market reaction. We'll talk about some of the tech stories of yesterday. We will look ahead to the Fed, of course, as well today.
Well, ironically, we're talking about a day where there's kind of that having that bond buying and an expert on ETFs, which is, of course, the mechanism which through that is done. Plenty of data as well on the docket. At 10 a.m. UK time, we get that Euro area CPI. Remember, we got some mixed messages coming out of the data yesterday versus France versus Germany. That weakness in Germany continuing to be persistent. Let's see how that shows up in the likes of the 7-year bond auction. About 3 billion euros worth is up for sale at about 10:30 a.m. UK time. And that's just the bond story. Then there's plenty going on in the earnings story as well, specifically over in the States, where, of course, we're going to get earnings in the U.S. pre-market out of Boeing and then aftermarket out of Meta. Do we start to see some of this tech pain either subside or even magnify in the face of that? And then, of course, it is the big one, the Fed rate decision at 7 p.m. UK time. That's where really, Anna, we're going to be talking a lot about not this cut, but what happens about a September cut.
Yes, absolutely. So the Fed very much in focus. We'll continue to keep that on your radar as we go through this morning's programme. But there is a lot to talk about. Let's tell you about some of the other stories we need to keep on our radar this morning. Some of them coming to us from the Middle East. Hamas says Israel killed its political leader, Ismail Haniyeh, in an airstrike in Iran. This comes after the killing of a senior Hezbollah commander in Beirut, who Israel says was behind a Golan Heights rocket attack that killed 12 young people. In the UK, Chancellor Rachel Reeves has warned to expect tax rises in her autumn budget. Speaking on the Newsagent's podcast, she said, quote, "I think that we will have to increase taxes in the budget." It comes amid a row over how much she knew about the £22 billion fiscal hole she inherited from the last Conservative government. Shadow UK Chancellor Jeremy Hunt responding says, quote, "They had a choice and they have chosen to raise your taxes." And a new poll suggests Kamala Harris has wiped out Donald Trump's lead across 7 U.S. battleground states as the vice president rides a wave of enthusiasm among young, black and Hispanic voters. The Bloomberg News Morning Consult poll found 48% support for Harris and 47% for Trump. That reverses a 2-point deficit for Joe Biden before he withdrew from the race. However, the result is within the poll's margin of error. And that would seem, Kriti, an important point to linger on. This is all still within margins of error for these polls. These are two candidates still very close to each other. Well, one formal candidate and one expected candidate.
Right. And we should also mention that, speaking of that expected candidate, the virtual roll call is expected to be held between August 1st and August 5th. That was something coming out of the Democratic National Party. So again, she's the presumptive nominee is, I think, the way to put it. I think it's also crucial that we talk about some of the developments on the GOP side as well. The director of Project 2025, and this is a really important story for me, has actually stepped down. Now, this is crucial for an international audience because it talks more about the policy agenda from Donald Trump. Well, remember that when Kamala Harris accepted the Biden endorsement, she specifically said we're going to defeat Donald Trump and his Project 2025 agenda. Since then, he's really pushed back on an agenda that largely shows up as kind of MAGA policies, kind of really catering to his right-wing side of the party. Now, the Project 2025 director has stepped down, saying that a lot of those moves are going to continue despite his departure. But what it shows for an international audience is that President Trump is kind of distancing himself, not only from that agenda, but also coming out on top within the party when they're kind of dealing with a little bit of this internal dissent.
Yeah, that Project 2025 getting increasing mentions, as you say, from Kamala Harris herself. So worth keeping it on the radar, an important change at the top of that particular movement. Coming up on the programme, we will be, of course, across all of the other earnings stories this morning. Airbus is reviewing its space division after racking up nearly $1 billion in charges in the first half of the year. We will be hearing from the CEO, Guillaume Faury. We'll bring you some of our conversation with him later on in the show. Plus, the world's biggest maker of beauty products, L'Oreal, reports sluggish sales growth from weakness in China. Another European business suffering because of the Chinese consumer. We will be live in Paris with a breakdown of those numbers. Up next, though, BOJ Governor Garcia-Herrero Ueda is due to speak this hour after the central bank hiked rates. We will discuss what it means for the yen. Sonia Martin joins us from DZ Bank. That is a conversation coming up shortly. If you have questions of your own you want us to put to our guests, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
The Bank of Japan are actually learning and watching from other central banks. So it is a little bit flipped in the sense that they're raising rates much later.
A headwind for the yen going forward is just the sheer capital outflows from Japan.
The majority of sort of seasoned economists are not expecting a hike. And so that might mean that we get a little bit, perhaps a little bit of an upside in dollar yen, a little bit of that rush to the exits sort of ending for a little while at least now.
Bloomberg TV guest speaking on the show prior to the Bank of Japan's rate hike. And as Jane Foley was saying there, this is unexpected. The consensus of economists didn't actually see this coming. And yet you see a market reaction that feels a little bit of the equivalent of a shrug of the shoulders. 152.83 is where we're at on dollar yen. Let's look at what's happening underneath the hood and bring in Sonia Martin, head of FX and monetary policy research over at DZ Bank. Sonia, you've picked a fabulous day to join us because we need some help here, especially when we're talking about a hike for the BOJ. We're still waiting for the press conference. It should kick off in about 12 minutes time or so. What is going to change the dial for dollar yen?
Well, not just the rate hike, but in fact, I think a fairly hawkish statement from the Bank of Japan, who left no doubt that they are intending to hike rates again, as the year progresses. So it was a fairly hawkish statement, as hawkish, I think, as we could have expected. Now, everyone's waiting, as you just said, for the press conference. Governor Ueda has a bit of a history of talking down aggressive monetary policy action. We've seen this happen again and again this year. So I think there's still some concern that in his statement to the press, he could be more dovish than maybe the initial statement that was released by the BOJ suggests. And I think people are also holding out for the Fed this evening. So there's a bit of a wait and see pattern right now. So we may see some more action in dollar yen once, those big milestones have taken place. But yeah, I think the market reaction, as you said, somewhat disappointing this morning.
It's interesting because we've talked so much about simply these the fact that the yen is more of a BOJ story, more of a positioning story, given that the yen and JGBs by extension have proved to be more of a hedge. We're showing on the screen right now, Sonia, the very point that you made, and that more hikes are expected down the lane, or down the road, I should say. Walk us through the capital flow story, because this is the first time I feel like in some of the commentary, the BOJ has actually talked about those haven flows. How much of the haven flows, how much of the positioning is getting in the way of a more traditional hawkish reaction in the currency?
Well, I mean, first of all, what we did see this year was this massive buildup of speculative dollar yen long positions, right? I mean, they were fairly moderate to start off, and then they just kind of blew up as, over the spring and early summer. And we have seen a massive correction of that, I think, triggered mainly by the intervention of the BOJ, which, put a bit of a damper on the sentiment. So we have burst the speculative bubble. So now we're back to fundamentals. And the fact of the matter is that even with the BOJ hiking rates, the yield differential remains very large. So, I mean, there's a lot of talk recently about carry trade unwinding. I'm not quite sure if I'm buying into this. I mean, even if the BOJ continues to hike rates, the yield differential will remain very large. It still remains very attractive. So I'm not quite sure why the market is arguing that we're going to see some massive unwinding of positions here. I think what people are looking for and what we are looking for is that in combination with eventual rate cuts from the Fed, the differential will shrink a little bit, but still leaves the yen on a back foot compared to other currencies.
Yes, and a number of people making that point this morning, Sonia, about negative real rates still persisting in Japan, and with that in focus, does that mean that we pause here and wait for what we get from the Fed later on and expectations around September and a rate cut there? Or is it possible that Ueda says something in the press conference before then that changes our thinking?
Yeah. Well, I think a hawkish press conference might be a trigger for more yen upside this morning, because I think people are kind of, thinking of the last press conferences, which ended up being fairly dovish. So I think a hawkish, clear statement from Ueda could lend the yen some support this morning. Then we look at the Fed. I mean, the market is clearly positioned for a very dovish Fed statement. I totally disagree with this assessment. I think, the Fed has no reason to rush into rate cuts, in September before the election. They have the luxury of waiting. We've seen some very good data from the US. So I think maybe the market will get a bit of a disappointment this afternoon in terms of, the dovishness of the statement. And that could pull dollar yen up again. So it's likely to be a very volatile day of trading for dollar yen today.
Yes, so a bit more on the Fed then, Sonia, and in terms of what we're looking for. I've noted a few sort of prominent voices over the last couple of days becoming increasingly comfortable with 2 cuts in 2024. David Solomon at Goldman Sachs. PIMCO talking about getting into a rhythm of 1 cut per quarter. What kind of signalling are you going to be looking for from the Fed later on?
Well, the Fed is going to cut this year. I think that much is clear. I think it's a matter of the timing of the first cut, and it's so much more complicated because of the election. A lot of people are now looking for September. I think that's fully priced in from the market at this point. But again, I mean, with the GDP numbers having been much stronger than expected. The labor market data on Friday is likely to be solid. The PCE didn't come down. Inflation is still too high. Why does the Fed, or why should the Fed rush into a rate cut in September? Why shouldn't it wait until after the election? It has the luxury to do that. And I was asked a few days ago whether the Fed's at risk of falling behind the curve. I don't see that happening. So I think, yes, they will cut rates, but I think the better choice for them is to wait. And I think Powell is going to leave all options open today just because he doesn't want to pre-commit.
Well, let me push back on that for a second, Sonia, because you say that they have that luxury to cut after the election, but isn't that the exact reason that they would cut before the election? Because to make time for that lag and to make time for the fiscal policy that may change come January 2025, is this not front-running some of the volatility that may come out of kind of the election and the basically not just the election, but what a Trump 2.0 or even a Kamala Harris presidency may look like?
Yes, I mean, the problem is obviously if Trump wins the election, then the window for rate cuts by the Fed will close fairly rapidly because, we know he's going to impose some high tariffs that's going to push inflation higher. And that does, in fact, mean that in 2015, the window for rate cuts closes. So that would, you are absolutely right, that would argue for an early rate cut. But I think the Fed at this point obviously can't be sure who's going to win the election, and well, none of us can. And so I think rather than wading into this sort of very difficult political, dangerous waters pre-election, the Fed's going to wait because it's just, and that's not that long. I mean, we're just talking about November. And the thing is, Trump is keeping a very keen eye on the Fed. And I think they're not going to risk that if they don't have to be honest. And yes, there are lags involved, but I think that's not going to make a material difference whether they hike in September, they cut in September or they wait.
Sonia, really interesting conversation. We'll continue to have those, of course, around the Fed and the politics and the timing. Thinking about the euro, your thoughts on the euro, given the amount of data we've had out this week, both on the growth side, the inflation side, some of that's still coming through, of course. Some people making the point that the ECB, by the September meeting, will have a lot more data to go on. What are your expectations there?
Well, the ECB has started its rate cut cycle. They're going to continue, at their very leisurely pace, one cut per quarter. Every time they get their new projections, they can cut. So we're looking for that to continue. The euro-dollar reaction to the data last week from the US was a bit of a surprise to me. I mean, I thought the dollar might benefit a bit more from the strong US data, but overall, we have obviously seen euro-dollar come down from its recent highs, and that does make sense. I mean, the data from Europe has been fairly dismal, and we have had some upside surprise in the US. So that in combination is enough to push euro-dollar lower. Having said that, I mean, we've still, very moderate movements here. I think there isn't really the necessarily fundamental or monetary policy momentum to justify some large moves above 110 or below 105.
OK, Sonia, thank you so much for your time. Good to speak to you. Sonia Martin, Head of FX and Monetary Policy Research at DZ Bank. We'll get back to the BOJ conversation. We are live in Tokyo for you as the BOJ Governor Ueda is expected to speak after the central bank raised rates and also gave us that fairly hawkish statement, as Sonia was just outlining for us. What will we hear from Governor Ueda? Sonia was pointing out that we previously have had some fairly dovish press conferences from Ueda. Could we get something a little bit more hawkish today? We'll get some instant analysis. Alicia Garcia-Herrero will be joining us from a Natixis at CIB for that BOJ conversation. This is Bloomberg. Good morning, everybody. 30 minutes from the start of the opening trade here in Europe, but it is to Tokyo that we turn our attention right now. Governor Ueda at the Bank of Japan is making his press conference, just getting started. No headlines yet across the Bloomberg terminal, but just getting started with his address to the assembled media. Kriti, explaining really the thinking behind a rate hike from the BOJ and also that more hawkish language and setting out the bond buying platform, how much they're going to wind that back down over the months and quarters ahead.
Yeah, Japan has a wage problem, has an inflation problem, has an oil import problem as well, and one that they haven't been able to manage, not to mention a currency problem. We're looking at about a 152 handle on dollar yen right now, and this is coming after some thoughts about intervention, some kind of unwinds in terms of kind of haven positioning as well. And I think what's interesting here is that so many people are waiting for this to be the moment, this press conference to be the moment, what headlines we get, for a lot of that kind of run for the exits to flip almost, especially given that we are expecting hikes, or the markets are expecting further hikes going into the rest of the year.
Yeah, we talked about that earlier, didn't we, with DZ back talking about the expectation around further hikes there and setting that against the Fed. Let's get into a conversation about this now. Alicia Garcia-Herrero joins us, Chief Economist for Asia Pacific at Natixis CIB. Alicia, nice to speak to you. We are waiting for we're watching Governor Ueda deliver his press conference. We're waiting for some headlines to come through from it. Your initial response then to the news we've had so far from the BOJ around winding back bond buying. We've got a timetable finally around the pace at which that will happen, and the hike from the BOJ. What do you make of what we've heard so far?
Well, first thing I should say is that I think BOJ learned its lesson in June. If you recall, they barely made it to announce they would consider a reduction in bond purchases in July, and that they would give some guidance as to how they would do that. And the market was so disappointed that the yen really went, all the way to levels that I think really scared even the Ministry of Finance, not only the BOJ, which explains the intervention in July. And I think what the BOJ got out of that is that, yes, they've been preparing the market too slowly. Yeah, we had a first hike in March, and everybody was thinking, okay, get it going. And that June meeting was just not enough. So this time around, I think they basically went with full win. They went with a hike of 0.25 and even with an announcement of a reduction of purchases, not only a very specific target in 2 years, which is half of the purchases now, which brings us close to where we were with when Kuroda started increasing the purchases of JGBs, but also the detail. Actually, every quarter they're going to do 400 billion in reduction of purchases. So they've gone from hardly any detail in June to every detail and even a hike now. So in that regard, I think the BOJ has learned its lesson, and the market has shown them the way, because of such huge yen depreciation. So these 2 days, the week or so of appreciation of the yen showed them the way. They had to listen to the market, and they did.
Okay. With that in mind, then, so you say that they learnt from June, they've gone full speed this time around, then, Alicia, with something more for the markets, but it still doesn't give them positive real rates, does it? And it still leaves them with a big yield differential against the United States. So in that sense, will market thinking shift?
Well, I think the reaction will be positive because only about 1 out of 4 BOJ watchers were expecting a hike. So they've gone beyond the market. It is true that overnight, so last night, we kind of heard it loud and clear they would hike. But until last night, I think, that the market wasn't yet fully pricing that hike. So in that regard, I think they surprised the market positively in the direction of what the market wanted. And to my mind, they will also come and say, hopefully Kuroda will say, that might not be the last hike. So, we're getting there. So that will help. But they have to be careful with the 10-year JGB yield, though. If it goes fast, high too fast, Ministry of Finance won't be happy about this. So that's their constraint, too fast of an increase in the 10-year JGB yield.
So, Alicia, it feels like the momentum, the move, the margin of the move is really what we're keeping an eye on. Hold that thought really quickly. Just when I want to quickly mention that as we are hearing from Governor Ueda, those initial headlines in English now hitting the Bloomberg terminal here, basically saying Japan's economy is recovering gradually. He's going through the initial points of the decision. Of course, we're going to keep you apprised of the headlines. That press conference, as you see on your screen, happening in Japanese at the moment. Alicia, I want to bring you back into the conversation and talk about the inputs into this decision. We've, of course, put a lot of weight on wage negotiations with the likes of Toyota, with Hyundai, for example, as well in other parts of Asia. But I'm curious about the oil story, and especially as we digest some of the geopolitics happening out of the Middle East, out of Venezuela, how closely, how vulnerable is Japan right now to spikes in oil prices?
Well, the Japanese households have lost so much purchasing power since the invasion of Ukraine started for reasons you just mentioned, oil prices, but also the yen. So, they are very concerned about this. But at the same time, though, and this, I think, explains the hesitance by the BOJ since March to today, And they know that that virtuous circle they always talk about between inflation and wages is not so strong. Yeah, small companies in Japan don't want to raise wages, and they know that the economy, actually, we revised our projection downward for GDP growth this year. So they talk about a recovery, but they wish it will recover, if you see what I mean. So, I think basically in a nutshell, a weak yen doesn't help the Japanese economy anymore. Households suffer, as you mentioned. So I think in a way, this is a helping hike for the economy, if I may say so.
Alicia, it's a good point that you make, and I want to bring it right back to the bond buying story, or the lack thereof, in terms of pulling back on some of that QE, because traditionally and historically, Japan has served as a roadmap in monetary policy, or as even a guinea pig, I would argue, for the Federal Reserve, the BOE, ECB, you name your central bank. And it feels like now that dynamic is reversed. What is the BOJ learning from the Federal Reserve right now?
Well, a very important lesson: don't reduce your balance sheet too quickly. Nobody has. I mean, the fastest mover has been the ECB, and very carefully even there. So I think, the idea of the BOJ allowing purchases beyond what I just mentioned, like halving the purchases. I mean, they're still purchasing. They're not really yet tightening, meaning reducing the balance sheet. They won't do that for the foreseeable future. So they know that has to be slow. And I also would argue that any additional hike would have to be slow because they have humongous public debt, much bigger, actually double the US. So, they're more constrained than anybody else, frankly.
Yes, you mentioned these things have to be slow, Alicia. Governor Ueda talking about how they have to be predictable, so saying it's appropriate to reduce bond buying predictably. Back to the point about real rates that we mentioned earlier, saying that real rates will stay significantly low. Also reiterating things I think that the governor, the Bank of Japan has said before about FX. FX moves are more likely to affect inflation than before. Will adjust the bond plan if needed. I guess that goes back to your point you were making earlier, Alicia, about focus on the 10-year bond yield, the JGB yield, and they won't want that to move too quickly. So maybe that's the point he's making when he says the bond plan can be adjusted if needed, because we've got a lot of detail about how that's going to be pulled back, haven't we?
Absolutely. I think this sentence was there even in March, and it's a very important point. What Ueda is basically saying is that I give you a plan that's 400 billion a quarter, but bear in mind that if my 10-year JGB yield goes through the roof, I'm going to intervene. I'm going to reduce the purchases. That's what he's saying. And frankly, rightly so, because it would be a humongous financial shock for Japan, knowing how many of these JGBs are still in the hands of lifers and other financial institutions who have a massive increase in JGB yields. That would be quite scary.
Well, talk to us a little bit then about, we talk about the JGB yields, and I'm curious then, again, bringing it back to what's going on in the States and going back to what's going on in the Federal Reserve, because demand for some of this debt, it feels like Japan has benefited from it in terms of a portfolio hedge. But I'm curious, again, bringing it back to capital outflows. We talked about this in the space of the FX story, but in terms of the space of the bond story, you mentioned that the pace of QE is slowing down. What would it take for Japan to actively consider quantitative tightening and actually join the rest of the world in putting that on the agenda?
Well, it's just that they have to do so much more. So remember, Ueda basically, exploded the BOJ balance sheet, and what they now need to do, again, realizing that I think any 10-year JGB yield above 2% is scary for Japan, given their debt. So I think they first need to reduce the purchases to half in 2 years. I think that's reasonable. And then we are still at 3 trillion purchases a month. So they need to go to zero, and then from zero to negative. So, it's going to take a while. But as long as the market knows the direction and the speed, I think this should be fine. And remember, Japan is the country in the world with the biggest home bias in terms of having all of these financial institutions still very much into JGBs. BOJ holds 53%. So what we're basically saying is that they will keep on holding about the same. They're not going to reduce their holdings of JGBs for the time being. They're going to accumulate less. And slowly but steadily, they will decumulate. But it's going to take a long time,
Well, Alicia, let's bring it back to that public debt issue then as well. And I'm so glad you mentioned it, because, again, bringing it back to the parallels that you're seeing with the rest of the world, this is a conversation we're having in France, arguably in the UK, certainly in the United States, as you point out as well. And I'm curious, outside of just letting kind of some of these bonds roll to maturity, which of course is what the Federal Reserve is doing, and it feels like what Japan is going to ultimately do, certainly down the line as you lay out, what else can they do to tackle that public deficit? Is that only something that can be tackled through this bond story, or are there other ways that the Japanese economy, perhaps through fiscal policy, can handle that?
Yes. Well, that's a great question because it brings us back to the famous Abenomics. This was basically Abenomics' second arrow, fiscal consolidation. Of course, this was, the introduction of VAT hikes, and then eventually the whole idea of doing that was to stabilize public debt in Japan. So frankly, we've moved in the opposite direction since, because we had several stimulus packages since COVID, during COVID, after COVID last year. So, I frankly think that they need to do something about this. Now, the good news, if we really look at the good news about Japan, is that it seems productivity is increasing. This is a major issue. It was extremely low. So it seems there is a new Japan, put it this way, in terms of productivity, new sectors, semiconductors. If growth comes back, then by definition, we have higher inflation, real GDP growth comes back thanks to productivity, then miraculously, if I may say so, the dynamics of public debt do change quite substantially. So I think that here the key is, will this normalization of monetary policy in Japan, beyond other changes in the economy, bring more growth to Japan? If it does, then we are on a footing. Yeah.
Alicia, what are you going to, with your hat on as chief economist for Asia Pacific at Natixis CIB, what are you going to be watching for from the Fed? Because of course this is one side of that really important relationship at the moment. What's happening in Japan, but we've seen that dollar yen hasn't moved all that much, and the market perhaps waiting for something. What are you going to be waiting for from the Fed? So
let me tell you that the Fed is king in everything we do in Asia in terms of central bank behavior, etc., including the BOJ. And this has become more the case than ever, given the pace of U.S. Fed hiking in this cycle. It's been enormously important. In fact, the yen depreciation, even after Ueda managed to finally increase rates for the first time in I don't know how many years, in March, I think the reason why the yen depreciated was actually very much related to the delay in the Fed's cutting cycle, more than anything else. And therefore, I think Japan has been suffering from this carry trade position, being the funding currency, to some extent even the RMB, by the way, to high yield in dollar. Because the Fed finally, and we think, at Natixis, our US team thinks cuts will come in September, and they've held this view for a long time. I think this explains the strength of the yen. Yeah, I mean, these positions are they have been unwinding for a week or more, or so, even slightly more, and appreciating the yen. And this also explains the RMB, by the way, relative strength, no matter the fact that they're cutting rates. So it is so important. And I do hope that the Fed, has an easing, sooner than later, interest in an easing mode, because that will make BOJ's life much, much easier.
Alicia Garcia-Herrero, Chief Econ for Asia Pacific at Natixis CIB, we thank you so much. A really all-inclusive kind of wrap of not only the BOJ, but the Federal Reserve as well. And just to flag some of the headlines we are still getting out of Governor Ueda's ongoing press conference, he's now talking about wage hikes as well. He expects they will continue to the upside. They're also seeing raising input costs, increasing prices, but that it is appropriate to raise rates under the current environment. So again, highlighting some of the very things that Alicia was there just talking about, specifically around the wages and those input costs. Right off the back of it, you are seeing dollar yen trade at about, we'll just crash at 153, 152.87.
Let's just check on some data coming out of France as well, Kriti. We've got CPI numbers coming through, rising 2.6% year on year. The estimate was for that number out of France, that inflation number, to increase by 2.8%. So it seems that the French CPI story coming down faster than had been expected, and also in contrast to what we heard from Germany yesterday, where we saw that unexpected tick up in the German inflation data.
It's certainly something we're going to be keeping an eye on. Coming up on the program, we're going to get to your stocks to watch, including HSBC, as Noel Quinn signs off as CEO with a $3 billion share buyback. We're going to get more of the details. Stick with us. This is Bloomberg.
Welcome back, 7:49 here in London. Let's talk about these markets. Futures expectations suggest we go higher for stocks at the start of the European trading day. Let's circle back to the BOJ, though, and the impact that's having on thinking. Our Markets Live executive editor, Mark Cudmore, joins us now to talk about the markets in 3 minutes. Mark, let's start with market response, or lack of it, perhaps, in FX markets to the BOJ. One of our guests at the top of the hour was saying the Governor Ueda is usually dovish, so if he sounds in any way hawkish, that could mean something to markets. What do you make of what he's been saying so far?
Good morning, Anna. Well, he's certainly trying to sound hawkish. I am surprised. I expected that, given that they did hike rates, that he would kind of qualify that. It would be confusing to sound uber hawkish to guide for more rate hikes, in context that the economic signals have been extremely mixed recently, and you wouldn't think he'd want to bungle the one chance of Japan finally getting out of decades of stagnation. So I am surprised, because he's coming to this press conference. The initial statement and the answers to questions sound quite hawkish. He's even talking optimistically on the consumer. That hasn't been good. So look, my first instinct is that this is obviously good for the yen. He's backing up hawkish policy by hawkish rhetoric, and even though the forecasts don't seem to really justify such conviction, the data hasn't seemed to justify it at the moment. That is going to support the yen in the very, very immediate term. I think, though, that very quickly, maybe even by the time we get to the end of the press conference or he gets a hard question, people are going to struggle to buy into that hawkish rhetoric because the data is just not backing up what he's saying.
Well, Mark, we've had a slew of guests come on and say that this is actually, when it comes to where the yen is going to go, it's maybe a little bit less about what Ueda says and more about positioning. And I'm curious what you think of that, especially as we kind of unwind some of the positioning in the yen, given this more hawkish pivot, or attempt to be at least. Walk us through kind of the technical, the plumbing story here.
At a superficial level, we've cleaned out a lot of the weakest hands positioning, the most speculative positioning. The thing is, though, the market has a very large structural short yen through kind of long-term carry trades, and they're not vulnerable to quick kind of turns. But if you really envision a major yen appreciation in the second half of this year, they will become vulnerable. So I think that the weak hands being cleaned out, the short-term positioning is much cleaner. Certainly, anecdotally, talked to a lot of traders. They squared up before this event, and we're a little bit fresh there. I think that provides the opportunity for people to re-short the yen. But it is true that there's structural still shorts for the yen, may find it hard to sell off too rapidly.
OK, and a quick word, Mark, on oil. Oil prices are responding to overnight news flow from the Middle East. They don't always, but it seems that tensions are on the rise.
Yeah, look, they are. And I think the backdrop here is we've seen a couple of weeks of oil prices falling quite rapidly. Now, the reason oil prices were falling was entirely due to the demand side story, that getting more negative about kind of global growth. Obviously, we've seen some slightly softer prints out of the US. We've become more negative there, worried about China's demand. So I think that there was a backdrop where, again, we are more kind of bearish, and suddenly, oh, wait, there might be a supply disruption again. I don't think that the supply disruption story is particularly sustainable in its own right, given that we've kind of long priced the Middle East tension story. But I think there's a chance we're already too negative on demand. We can get more optimistic on demand with a little bit of supply tangent. Oil can bounce from here.
All right, Bloomberg Markets Live executive editor Mark Cudmore walking us through some of the major stories and the market reaction off the back of that. We thank you so much. Let's get to our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So starting in the banking sector, HSBC shares rising in Hong Kong ahead of the London Open today as the outgoing CEO, Noel Quinn, signs off with $3 billion worth of buybacks, returning more excess capital to shareholders. We can see the stock now up around 2.9% over in Hong Kong trading. The pre-tax profit beating expectations by around $1 billion, and also record profits in one of their wealth management divisions as well. That stock, though, trading at around a 5-year high at the moment, so potentially a lot of that might be priced in at the moment. Then we're also looking at Airbus, a bit of positivity in this one following a recent profit warning. 2Q adjusted earnings before interest beating expectations. Also cash flow looking good as well. And finally, they are reviewing one of their major space programs, which could be a bit of a relief for the company, only around a month since they issued a profit warning related to supply chain issues. Finally, looking at L'Oreal, this one reported after the close yesterday. Now, this one a bit more negative. 2Q like-for-like sales missing expectations by around a full percentage point at 5% in terms of the growth. Most of this driven by North Asia cosmetic sales, particularly China. North Asia sales down around 2%. Bear in mind, though, a lot of that might be priced in as well, giving a recent slump. Keep an eye on that one, too.
Yeah, absolutely. Another business which suffers because of performance in the Chinese market. Joe, thank you very much. Our equities reporter, Joe Easton. We'll also keep an eye on ASML, the whole tech sector. Interesting reports from other media talking about how US restrictions on chip sales to China might, to some degree, exclude allies. We'll get further details on that story shortly. The market open is next. This is Bloomberg. Welcome back, everybody. A few minutes to go until the opening trade then for this Wednesday morning here for European equity markets. Let's backtrack and have a look at where we've come from through yesterday's session. This was the yesterday European story, a story of gains essentially, but a bit of retreat as we got into the US session where we saw US stocks on the back foot there. And then we saw not much uptick from US stocks towards the end of the session. That doesn't really tell us much about where we're going because the futures picture here for Europe is quite positive, but there's a host of factors building into this. So you can see we're up as much as over 1% on Euro Stoxx 50 futures. We've got stories around tech stocks and around whether we might see some exemptions or some tough export rules from the United States around some technology. So we'll keep an eye on that, Kriti. We're also watching the energy space. Oil prices moving higher. That could be something that in the short term lifts some of those big energy names, even if it's all a story about geopolitical tension, which might weigh on risk appetite, of course. So we'll watch that. And, of course, the individual earnings stories, which might cut through on some counts.
Well, let's dive into those individual earnings stories, Anna, because banking is very much in focus. Of course, you have the numbers coming out of HSBC and BBVA. Two very different stories, but two stories of strength, and that is very crucial here. HSBC talking about a $3 billion buyback. Let's see how it's received at the market open. I'm assuming positive, just given the Standard Chartered story we heard yesterday. BBVA as well. We know they're in the middle of that big hostile takeover as well. They're coming in with net beats on trading. They're saying their plan to take over Banco Sabadell is all in line. And Anna, you of course mentioned that tech story as well. Japan, South Korea, and Netherlands getting those exceptions from the U.S. in terms of sanctions around export controls to China. It looks like ASML may benefit from that, given it was such an overhang, not over just the company itself, but over the Dutch government. That may show up at the market open.
Absolutely.
As well.
So tech stocks certainly in focus, and that would be a real change in direction, a change in narrative on that tech regulation story or that tech export story, relations with China for the broader Western economy. So we'll certainly watch that. So the markets are now open. We are getting a slight move to the upside on the FTSE 100, but early days. The IBEX up by 0.2%. And Kriti, to your point, we've got a range of themes coming through in the earnings stories. There's the buyback at HSBC, an upgrade to guidance at GSK, but disappointment around some other European big heavyweight names, the likes of Airbus. So some mixed dynamics when it comes to the earnings stories, perhaps this morning. Maybe that's all being overshadowed by moves higher in oil prices, by some of the reduced expectations of tariff trouble, if you like, for the likes of ASML. But the CAC 40 then up by 1.2% this morning. We'll keep an eye on L'Oreal when it comes to the French market. Maybe that was all in the price, as we were hearing from Joe Easton, given headaches around China have been well flagged, of course. We have the FTSE MIB up by 0.4%. So we are seeing some pretty strong gains coming through across these European equity markets with a host of quite divergent drivers for market sentiment this morning then, Kriti.
Well, let's dive into what's driving the very story you laid out. And I think you nailed it when you talked about some of that oil price story, because it's that outperformance that's moving the FTSE 100 higher. Your biggest index contributors to the upside are going to be Shell, BP, Glencore. You are also seeing a little bit of a move in some of the other broader commodity names like Rio Tinto, for example. This is crucial given that we are seeing already an oil price, some of that geopolitical tensions fading in as well. But when you look at the downside, I should mention the FTSE 100 seeing some pretty broad green on the screen. But to the downside, GSK is taking a fairly big hit. hit and weighing on the index, but of course, not to the extent that you are seeing some of these upside movers. That is at least the FTSE 100. That is very, very crucial. But when this comes to stock 600, that's where the French stocks are taking the lead. Airbus, for example, your biggest index contributor to the upside, higher by 6.5% this morning, Anna. And that is, of course, in kind of the downside of some of the banks as well. We have HSBC, which is moving higher, but then BBVA, which we thought would maybe move higher, actually doing the exact opposite, taking a bit of a hit, down 1.3%.
Yeah, let's have a look at some of the individual movers then in focus. Interesting to see that Airbus is up by 7%. That despite the fact they took that large provision around their aerospace division. We'll get an update on what's really going on there and expectations now post the earnings report. And we'll hear from the CEO a little bit later on in the programme, so we'll get some further details there. Schneider Electric up pretty strongly on the back of their earnings numbers as well, up by more than 4% this morning. Interested to see where ASML trades. I think that one is still closed. I saw a headline across the Bloomberg terminal saying the shares are halted at the open in Amsterdam. So we're certainly waiting to get an opening price there that suggests that tech story, and we're looking to get more details on it, but that tech story, a shifting expectation about the extent to which US export policy is going to apply to Japan and the Netherlands, that's going to be something we're watching there. We're watching it through the Asia session. Tom McKenzie flagging for us to watch it here in Europe, and it seems as if it could be something of an important mover.
Yeah, you mentioned Japan, Netherlands. I'm going to add South Korea to the mix as well. That's going to be a crucial one. But of course, these are the three major export markets. So then we're going to have to go into conversations about how the U.S. policy may shift around that. At least it's the broader story. Geopolitics really showing up and in the forefront of some of these conversations. Let's see how it shows up in the markets. Already you're seeing some of those individual moves. I want to bring in our next guest here, Morgan Deldon, head of investment strategy over at Global X ETFs, joins us around the table. Morgan, I imagine you're getting your head around some of these earnings just as fast as we are, but I think we should broaden out the story, specifically because it's not just these micro moves we're keeping an eye on, but specifically what the BOJ does, the Federal Reserve, the BOE tomorrow. Take your pick. Where would you like to start?
It's a really busy week, but I think markets is really focused on what the Fed is going to do next. And with the Fed's coming, I think what I will be really closely watch is the tone of the press conference post-meeting. Because at the moment, what we're seeing is the market expectations are higher than what suggests the dot plots from June. After March, in June, there was an upward revision of the dot plots, indicating probably just one rate cut. However, the market is pricing in between 2 and 3 rate cuts for the year. So there seems that the expectations are unanchored with the Fed. So depending on either Jay Powell is going to be dovish, in line with what market expects, or is going to be more hawkish, will be an important information on whether he wants to set comfort to the market with potentially 2 to 3 rate hikes, or it wants to prepare the market for repricing it down to 1 rate cut. I do believe that the current conditions in the U.S. economy suggest that 1 rate cut is probably a good bet for the year.
How does that show up in the market reaction, though? Because to your point, the markets are already pricing in 2 rate cuts. Some would argue that if we do indeed get that indication from Jay Powell, the markets may kind of shrug their shoulders and say, we told you so. But I'm curious whether that might even be received as a negative, given the cracks in the economy, maybe signal a little bit of panic. What do you think?
I think we could see some of the reversal from the rotation towards small cap we've seen earlier this month. This move was really triggered by the expectations of lower rates, given that small caps have more like variable rate debt. But we could see some of the reversal, and we need to into like more large cap and potentially big tech companies. And this is happening at the same time with earnings of these big tech companies, which is another topic that is really on top of mind this week, given that there might be more divergence between the Magnificent Seven group. Market seems very focused on seeing return of investments in AI to really support some of the tech companies within this group.
One of the stocks that catches my eye this morning, Morgan, good morning, is JDE Peet's, which is a coffee processing business operating out of the Netherlands. And that stock really on the rise, up by more than 17% this morning on the guidance upgrade that they're giving us. And we do seem to be in a situation where some companies guiding higher, benefiting from the market's response to that. I'm thinking, well, GSK guided higher, not quite such a clean-cut response from markets. But we're seeing some areas where we get upgrades to guidance, other areas where markets are less sure, less firm-footed. What are you making of the earnings story so far and the reporting season so far and how it's going down with markets?
I think there is a real difference between internationally exposed companies and domestically exposed companies, and that's true across all regions, like Europe, the UK, but also the US. And I think at the moment what we're seeing from economic numbers is that consumer spending is quite resilient, given that there is a strong wage growth that surpasses inflation. So all these domestically oriented companies should do quite well, even in this volatile environment, and be a little bit more immune to what's going on outside these regions, such as the slowdown in China, which might impact more of the highly internationally exposed companies, such as in the FTSE 100 or the Euro Stoxx 50.
And I'm thinking about, so you're mentioning the domestically exposed ones, and that's an area perhaps to focus in on. Perhaps also the changing nature of restrictions on some global, enormous businesses. I'm thinking of ASML this morning. We are watching this story developing around the extent to which the US will or won't try to control export licenses for ASML, for the Japanese chip makers, for the South Korean chip makers. I suppose the relationship with China and the geopolitics around it is still something we're learning a lot about and still very much in flux, especially as we make our way towards November and what could be a shifting policy backdrop from the States.
Absolutely. I think that's exactly the reason why volatility might stay very elevated up to November, when we get more clarity around the future policy and trade policy in particular between the US and China, but also the US and Europe. So all of these political landscape, which is highly uncertain, on top of uncertainty around economic numbers, which are sending us a very mixed picture so far, is really contributing to high volatility. So a more cautious approach from investors, I do believe that's what's going that's what we're going to see in the market.
How does that square then with maybe the tech trade that we're seeing over in the States? Because in the flurry of earnings this morning, I think we've forgotten to mention that Microsoft, of course, came in not that great when it came to cloud services. They were punished in the stock market after hours. And I'm curious what the read-through is into the global tech story when, to Anna's point, you are seeing the geopolitics drive so much of that, like this morning with ASML. But then what is the translation from perhaps some of the pain that we're seeing in the S&P 500 into, say, the stock 600?
Well, I do believe that given regional ambitions to become the leader in this digital transition, we might see more competition coming up with more protected regions in terms of trades, and therefore these magnificent seven, which has led the market and potentially being a catalyst and could continue to be a catalyst in the near term, we might see a diversification of this basket later on with more European names, Asian names, which will lead in their own regions compared to what we're seeing currently with only this magnificent seven really leading in the tech sector.
What's the next leg of the AI story then, Morgan? Because we became very obsessed with NVIDIA and that stock and that company's ability to deliver on AI. Now we're seeing signs that maybe, AMD is going after some of NVIDIA's market share. There's a lot of pressure on other big tech names to justify the amount of capex they're spending. What's the next leg, do you think, of the AI story? What are you watching for?
The monetization of AI investments. So really, I think that's going to be discriminating among all these companies and really show who's the leader. But I think another area which is very important to watch in these tech sector is the vertical integration of the big tech companies with cybersecurity, but also AI, cloud. We're seeing a tremendous growth in terms of how quickly the market is maturing. And I think this is what could be like, I do believe it's going to be a catalyst for the months ahead.
Well, a race to monetization, but in the process of that, you are seeing a giant amount of investment from some of these big companies. Microsoft, the jump in CapEx investment was massive. And I'm curious if that's simply because they're sitting on so much cash right now. Some of that is a little bit of the kind of massive issuance they had during the pandemic and during the kind of ultra low interest rates there. But I'm curious when that CapEx spend catches up to them. In any other industry, in any other sector, that would be a little bit of a pain point. When will that show up for tech?
It's very different, and what we see from the earnings results so far is a very positive contribution of AI in Microsoft, but not the same for Alphabet. So we're seeing some divergence, and this is really what I want to emphasize here, is CapEx in AI is definitely being seen as positive so far by markets, but now the market is expecting to see materialization beyond this from this CapEx. So I think that's the next step.
We want to see monetization then of the AI spending, all that CapEx. What's it for? What's it going to deliver? And this applies to not just the likes of Nvidia or Microsoft, but much further along the supply chain. And as the AI effect travels along these supply chains, Morgan, when does it start to become a macro policy consideration? Back to where we started the conversation, back to the Fed, the BOJ, lots of central banks around the world looking for productivity gains.
Absolutely, and what we're seeing from Q2 results, is that there is productivity gain from automation, but from integration of more technology. And for the first time, there is no productivity gain from cutting costs, cutting salaries or workforce. And this is positive from a macro story standpoint. So I do believe that higher interest rates, the only way that is sustainable is because we've got this technological shock that will make the potential of global economy, but especially in the developed world, higher. And I think this is really the whole macro story currently.
All right, Morgan Delton, we have to leave it there. We thank you so much. Head of Investment Strategy over at Global X ETFs, talking to us a little bit about that Trek trade and the next steps there. And speaking of, let's get a check on the sensational six, because ASML seems to be blowing this market out of the water, despite several earnings stories that we're going to be keeping an eye on. ASML higher by about 7%. I think your eye goes straight there, higher by about 7.4%. Of course, this coming off of that story that we were just talking about with Morgan there around the chip exports, Japan, South Korea, the Netherlands getting almost taken out of the equation when it comes to the U.S. getting tough on those chip exports to China. LVMH also rallying, though, higher by 0.9%. Novo Nordisk in on the party. The one that isn't is Ferrari, down about 0.2%. Even Nestle remains unchanged. So those are your underperformers. But tech very much in focus, at least when it comes to your European mega weights. Let's get a check on some of the other individual stocks on the move. Joe Easton, drinking out of a fire hose, it seems, this morning. Joe.
There's enough to choose from today, Kriti. As you say, the first place to look at these chip stocks, ASML, was up around 10% at the open of trading, the biggest gain in 4 years for that company. It is this Reuters report saying that the Netherlands will be among countries potentially excluded from these restrictions on US trade with China in terms of chip technology sectors. And we're seeing a gain across that space as well. BE Semi gaining, and also a bit of a boost for ASM and Infineon as well, really the highlight of the tech space today. But it is more about corporate earnings. We've got a lot to get through on these screens. Airbus gaining, recently had a profit warning, but it looks like they are reassuring on some of their cash flow targets today. But a big decliner in Germany. Siemens Healthineers, the maker of MRI scanners, seeing weakness in China, according to their statement. Glaxo actually upped its guidance. HIV, cancer, all doing well at the moment in terms of their drug sales, but coming down potentially not as much as what analysts had been hoping for. And HSBC getting a boost following that $3 billion buyback announced by Noel Quinn earlier today. Then in terms of some others, JDE Peets, you mentioned that one, feeding all of our addictions to coffee, up 20%. They are grappling with a spike in the cost of coffee beans. They do seem to be passing that on, convincing people to splash out more on their morning coffee. L'Oreal gaining around 1%. That looked pretty weak over in China, given some of the declines in skincare products there, but actually potentially that priced in. And BBVA, in the midst of that takeover with Sabadell, they've actually announced some of the cost-saving measures that will be included in that deal if it gets approved, and that looks to be not as good as some analysts were expecting. Just Eat Takeaway getting a boost from all of us sitting at home watching the Euros, buying more takeouts according to their report today, and that one is up 8% at the moment. We'll have a look at some geopolitical focused stocks as well. You mentioned that earlier. BP and Total Energies gaining a spike in the oil price given the simmering of tensions between Hamas and Israel overnight. That's getting the focus there, and a bit of a gain in some of the defence shares for the obvious reasons on that one as well. In terms of the morning calls, there was just one that stood out to me today. it's Euronext. Now, this one reported some very strong numbers recently. The owner of the Amsterdam French Stock Exchange, all of those around Europe, recently reported really strong revenue, but Goldman Sachs becomes the only bank with a sell rating, saying the rally has gone too far, and that stock is declining 1.3% over in France this morning.
Joe, thank you very much. Joe Easton from our equities team with a rundown of some of the many corporate stories that we're tracking this morning. We'll get back to the banking sector shortly. Coming up, HSBC shares are higher this morning as Noel Quinn signs off as CEO with a $3 billion share buyback. We will hear from our interview with Noel Quinn and get you some analysis. This is Bloomberg. Welcome back to the opening trade. We are 20 minutes into the European trading day, and you see some upside across a number of these markets. We're up by more than 1% on the FTSE 100, on the CAC Caron, the AEX over in Amsterdam, also up pretty strongly today, up by 1.6% on the back of that move in ASML. More on that sector, the tech sector, shortly. Let's go first to the banking sector, though. We're seeing some substantial moves in some of the players there. HSBC in the green this morning after the business announced a $3 billion share buyback. The lender reported second quarter pre-tax profit of $8.9 billion, beating estimates. Earlier, the CEO, Noel Quinn, spoke to Bloomberg's Jumana Besetcha.
We're retaining sufficient to drive growth, and we're distributing any excess because we've still got a very strong capital ratio, CET1 ratio. We're quite well above our target range. Therefore, we're able to both grow and distribute via buybacks. We do not pre-announce buybacks. We do it on a quarter-by-quarter basis. But I'm pleased that we've announced $3 billion today. And it's a function of the high returns that we're generating and the good profit performance we're generating and our confidence for the future. The other thing we announced today is a new target, a new guidance of mid-teens returns for 2025. That's a new piece of information we put into the market. That is evidence of our confidence of our ability to continue to deliver good, strong financial performance. Even if interest rates come down, we've built alternative revenue growth strategies to provide us with the sustainability of returns going forward as interest rates come down.
Yeah, let me ask you about that, because I see that you now expect banking NII of around $43 billion for 2024. I believe that number before was $41 billion. So a slight upgrade coming through there. Some would say it's surprising because HSBC is one of the banks that is more sensitive to a lower interest rate environment. So why did the upgrade come through?
Two reasons. Firstly, well, probably three reasons. One, the yield curve has shifted to the right a little bit. The declines are taking place slower than originally. But the most important factor, if you go back to around about 2022, our sensitivity to interest rate declines back then for a 1% decline was around about just over $7 billion. We reported at the end of last year that $7 billion had come down for a 1% decline to around about $3.3, $3.4 billion. We reported at this half year that a 1% decline has now come down further to around about $2.6 billion. So we have consciously put in structural hedging that lessens our sensitivity to interest rates. But as importantly, we've also grown and invested in alternative revenue streams and business activities to drive revenue growth from non-interest dependent sources, fee income, wealth management, transaction banking, internationalization of our client base. And as you saw in the first half, our revenue from wealth management was up 12% year on year, a very good second quarter performance following a very good Q1 performance. We're seeing resilience in our transaction banking fee income. Fee income, I think, grew by around about 4%. So what we're doing is we've lessened the interest rate sensitivity and we've invested in alternative business lines to grow revenue from other sources. And that's what's given us the confidence to announce a mid-teens return target for 2025 and have confirmed our target for 2024.
That's Noel Quinn, of course, of HSBC. Let's get more on this story. Bloomberg's Tom Metcalf joins us here on set this morning. Tom, good morning to you. So Noel Quinn's swan song, if you like, his last set of earnings. He was talking there about how they reduced their reliance on the higher rates and the net interest margin story. What else stood out to you?
Yeah, I mean, it was almost like he was enjoying himself, right? Like, kind of, it is probably the kind of set of results we were expecting, you know, as you say, a swan song. You know, broadly speaking, CEOs love to go out on a high. And so for me, you know, the big thing was that buyback, $3 billion. You know, for me, that was above the expectations, maybe more around the $2 billion mark. So, you know, definitely kind of a big push there. And you can see it in the share price today, up something like 4%. And broadly speaking, you know, this is the end of Noel Quinn's tenure. It does look quite a cohesive period in terms of he's stuck to the strategy, he's going out saying the strategy's still working, and, you know, I think his predecessor was saying the same. Oh, sorry, successor was saying the same.
Well, tell us more about that. His replacement already hitting the wire. What do we know?
Yeah, very much on message, basically saying, hey, look, you know, we're in a great place, we want to double down on our strategy. And what HSBC's been doing really well is keeping a lid on those costs. And just sort of managing through what can be a pretty volatile period. So it maybe hasn't hit sometimes the heights of other banks during, you know, kind of the interest rate rise, but equally it hasn't sort of, you know, really struggled as those interest rates have started to cool down. So, you know, El Hedri here, talking to analysts, talking to journalists, setting out his stall, but that is a stall that is effectively, we're going to keep sort of following the same pattern. We believe in the strategy, and it's my job just to basically continue implementing it and maybe do that a bit more sort of aggressively.
So the same stool?
Yeah, exactly.
Okay. Well, speaking of implementation, very quickly, Tom, putting you on the spot, one of your biggest movers to the downside in terms of index weight is BBVA. Despite a net trading beat, why is the stock down?
Yeah, it's quite interesting to look at that. You know, the big set of results for them. It's their first since, you know, they came out with the Sabadell offer. And I agree. On paper, it looks like a solid set of results. Whether people had inflated expectations or thought, you know, with that pressure of that deal, maybe they'd really be sort of, you know, putting everything on the table this quarter. It could be that. Or if you really want to play games with it, it could be that the shareholders are like, uh-oh, this good set of results makes it more likely this Sabadell deal is going to go. Yeah. We don't like that deal, so the shares fall down a bit.
I'll also add that Bloomberg Intelligence, I think, coming out with an instant reaction, talking about that the net trading income beat is actually low-quality net trading income. So we'll add that to the mix because there's a lot going on here. Of course, BBVA drinking out of a fire hose. Tom Metcalf will leave it there, giving us a wrap-up of some of the banks that are moving in trading this morning. Coming up, we're going from the banking sector to the makeup sector, I guess. We're going to be diving into L'Oreal's sluggish sales growth in the last quarter, what's driving it, where the weakness is coming from, despite us talking about some weakness coming out of China in LVMH's kind of makeup offering in Sephora as well. Do we see the same story in L'Oreal? We're going to dive into the details next. This is Bloomberg.
This is the opening trade, 30 minutes into today's session, and this is the picture across European equity markets, up by more than 1% on the FTSE 100 and the CAC 40, and certainly on the AEX, up by 1.6% on the Dutch benchmark. Let us talk about the driver of that move. Shares in ASML and other Dutch chip equipment stocks are gaining this morning after Reuters reported that the US plan to exempt chip tool vendors from Japan, the Netherlands and South Korea from upcoming export restrictions. Let's bring in Bloomberg's Tom McKenzie. He's got more details on this story. So, Tom, take us through what we know, what's in this report so far. What's our understanding?
OK, so this is a report from Reuters, and what it's suggesting in this report is that these additional restrictions that the US have been planning for quite some time, that are expected to kick in potentially next month, will exclude the Netherlands, Japan and South Korea. These restrictions involve the Foreign Direct Products line or policy or act, which allows the US and gives them the authority to restrict the sale of equipment into the Chinese market if they contain any elements, any equipment, any hardware, any software from US companies. So it is a powerful tool that the US are looking to reach for. But here's what's consequential, and here's why ASML is moving. They have been carved out of this new restriction, again, according to this reporting. So it's really fascinating in terms of how the US is thinking about this. Countries like Taiwan, by the way, and Malaysia have not been excluded, again, according to the reporting. So you're seeing big moves in companies like Tokyo Electron in Japan. And, of course, these sizable moves right now in ASML and ASM, of course, these key makers, ASML, key maker of these extreme ultraviolet lithography machines, in terms of the shipments and the ability for them to ship some of this kit into China.
Walk us through then. I mean, I guess I'm confused about it. If you take out Japan, South Korea, and the Netherlands out of the equation, what is the point of these export rules, specifically because this has been something that's been kind of, to your point, an overhang over these companies for a very long time?
And that's a really, really valid question. So one point to make is that we know that the Netherlands, via ASML and also Japan and South Korea, have been pushing back against these further restrictions because of what it would mean for their market share in China and their ability for these companies to drive revenues that are then ultimately put to use in terms of R&D, in terms of expanding and growing on that innovation and keeping these companies at the cutting edge. Now, let's not assume and let's not take from this that ASML is going to be shipping all of its high-end kit into China. That's not going to happen. They still face restrictions, as do their counterparts in South Korea and Japan. It's just that these restrictions, in terms of the most aggressive part of this component from the US, looks like ASML and others, the Netherlands, Japan and South Korea, will be able to get around that if they are carved out of these restrictions. Interesting, in the US companies, US chip makers have been lobbying for these kind of changes because they say we're being impacted because we have to abide by all of these very rigid restrictions. We're losing that market share in the US, and that is opening things up to our competitors in Japan and the Netherlands who are taking advantage of the slightly less restrictive restrictions.
Yes.
So there's pressure from multiple sides on this, and we're obviously assessing what it means ultimately. There have been many who have said as well that, you know, if you freeze China out completely from this kit, it just allows them to double down on their own investment and ultimately close the gap. And that's been the argument made by executives at ASML.
And ASML is up 7.6% as we try to understand exactly where the dynamic shifts next. And important to note, perhaps, one JP Morgan analyst saying this morning, Tom, that it's unlikely, to your point, it's unlikely to mean that export restrictions won't apply to these US allies, but that the US will probably negotiate with these countries on planned restrictions. So we might not be at the end of this story yet, but at the moment, in the near term, as you say, there is some relief.
Yeah, it's certainly one. Then we have to factor in kind of the earnings story out of tech as well. I'm really curious to see how the U.S. tech session trades off all of this. Bloomberg's Tom McKenzie giving us the lay of the land of how we are supposed to interpret some of the geopolitical news. And, of course, that market move at ASML shares higher by over 7%. Well, another market move that we're keeping our eye on is in L'Oreal, where they're pairing some of their earlier gains. This comes after the cosmetics giant's latest numbers showed strength in the European market in the second quarter, but sluggish sales everywhere else. Let's dive into the details. Bloomberg's Angelina Rascouet in Paris joins us this morning. Angelina, break it down for us.
Hi there. Yes, indeed. So L'Oreal came out with overall disappointed second quarter results. It was a miss overall, and they missed on all the units except for the luxury division. In particular, they missed for the dermatological unit, which includes brands such as Vichy, La Roche-Posay, or CeraVe. You know, this is a unit that's really led the growth of the past few years since COVID, pretty much, when people started really taking care of their skin. You know, if you think about all those beauty skincare routines that people are seeing on social media. But right now, that seems to be still growing double digits, but not as much as the market would have expected. But mostly North Asia, which includes China, is still down. This is the fourth consecutive quarter of negative revenue, and there were hopes it would be improving, but so far it doesn't sound like the Chinese market is going to recover. Basically over there you have a challenging consumer situation, worries about the property market, about youth unemployment, so that's all weighing on consumption.
Yes, really interesting stories then coming through in the L'Oreal numbers. Not necessarily a surprise about what's going on in China, but maybe the fact that dermatology is at the forefront of that trend maybe is more of a surprise than Angelina. What do we know about, thinking about China, we know a lot about the negatives, the companies that have been suffering as a result of weaker Chinese demand. That is not the story, though. Prada, a very positive set of results there. What can we see there?
Yes, indeed. Prada has been really an outperformer in the luxury space compared to other if you think about Gucci, or even if you think about LVMH. In the second quarter, LVMH posted results that disappointed the markets. Prada, it's Prada, but it's also Miu Miu, and Miu Miu has been on a tear. It's the smaller sister brand. Right now, it represents just under a quarter of total revenue, and it really appeals to the Gen Z, and it's got some brand ambassadors, when attending their shows that that are really appealing to younger generations. If you think about Sydney Sweeney, and so basically, I mean, Prada did really well. They are seeing strong results out of Japan, and that's pretty much led by tourism flows. Japan right now, you have a weak yen. Chinese are doing their purchases there. So overall, I mean, Prada really good, strong set of results, and their shares are I think they're up more than 20% a year to date. So that's good there.
Angelina, thank you very much. Bloomberg's Angelina Rascouet with the latest on the earnings stories coming through from luxury and consumer goods companies. Coming up on the programme, we will be sticking with the French theme. We were talking about L'Oreal. We'll get to the aviation story, though. Airbus gaining after a profit beat, but it's reviewing its ailing space business. Details next. This is Bloomberg.
Welcome back to the opening trade. We're about 40 minutes into today's session. You are seeing green on the screen across the board. Your heavyweights from ASML all the way to Novo Nordisk are actually moving this index much, much higher. But let's talk about what the downside is. Some of the movers that are moving to the downside. And of course, a lot of that is coming out of Spain, of all places. BBVA, for example, reporting earnings. Telefonica as well, reporting earnings this morning. Both are actually moving down. And now we're getting headlines here that the Madrid Stock Exchange is working on some data dissemination issues. It looks like, Anna, they're having a couple of problems when it comes to that market data, but we'll keep you apprised of what the connection is or where that's coming from.
Right, yeah, so whilst we're talking about what's going on in Spain, also worth mentioning that the Swiss stock pricing data is not updating. So these headlines just dropping across the Bloomberg right now. We'll continue to monitor those. Let's go to where we can get some pricing, and that is on the CAC 40 and the shares around Airbus. Shares in Airbus are soaring. That's despite the plane maker initiating a wholesale review of its ailing space business. The Airbus CEO, Guillaume Faury, says he's weighing all possibilities about the future of the subsidiary, that's a hard word to read sometimes, after it racked up close to $1 billion in charges in the first half.
We have underestimated the risk that we have embarked when we signed the contract or when we launched the programs. So we have had to record charges in our space program earlier this year. Actually, we informed the market in June of our challenges, and that's where we are in space. So we have launched a turnaround of the programs.
That's where they are in space. That's Guillaume Faury, the CEO of Airbus. Let's bring in Bloomberg's Sid Phillip, who analyses the sector for us, watches the sector for us. Sid, what stands out to you here? Because we've got a business taking a huge charge on the space sector, saying they're reviewing options. There were the numbers, of course, from the rest of the business. The stock goes higher. What's the takeaway?
Yeah, so at the moment, I think the analysts, as we saw a couple of analyst notes this morning, and all of them were sort of talking about how the results were better than expected. And that's sort of been a positive momentum for the stock. I mean, Airbus has, at the moment, is still delivering aircraft. They have struggled with supply chain issues on their commercial aircraft deliveries, and they've cut their annual forecast to annual delivery forecast to 770 from 800. So they've cut their they sort of expect fewer planes to be delivered. At the same time, some analysts are talking about how the pricing mix is better, and so they're actually able to get better prices on their aircraft, and that sort of helped them in terms of profitability and in terms of beating the estimates on EBIT and cash flow.
Well, the shares, to your point, rallying off that to the tune of about 5%. To what extent is it a precursor to Boeing, though? We put them both in the same category, but obviously two very different stories.
Yeah, absolutely. I mean, Boeing's a completely different story. I mean, ever since January, they've been sort of on a mission to try and control their quality and try and sort of get a fix on getting aircraft and production back up to sort of where they need to be. They're also sort of looking for a new CEO ever since Dave Calhoun, the current CEO, said he was going to step down at the end of the year. And so there is a lot of challenges at Boeing, and we're sort of waiting to see any sort of indications on what Boeing will do in terms of in terms of the next CEO, in terms of how they sort of plan to address their cash flow issues. I mean, Boeing is expected to burn through about $8 billion in cash in the first half of the year. And so it will be interesting to see how they sort of go into the second half, ramp up deliveries, get cash back on track, and look for CEOs.
Another supplier to the aviation and the wider aerospace industry, Safran, the CEO talking about the availability of engines there and, you know, the delivery schedule for those in the second half. We've got so many parts of this industry still reeling, it seems, from the post-pandemic supply chain disorder. What was the latest out of Safran then, Sid?
Yeah, and so the biggest problem for Safran has been sort of getting production back up from the pandemic. And that's the sort of industry story across sort of suppliers, across parts, and that's where Airbus is really struggling in terms of getting a supply chain back on track. So Safran is talking about how they're able to get production going again. They're trying to get the output of their engines, which they make in a joint venture with General Electric, called CFM, and that's been one of the big sticking points for Airbus in terms of deliveries and how they can actually get those deliveries back on track. And so they're talking about how they're going to try and raise production of those CFM engines in the second half of the year. They're also talking about how they're improving landing gears and other parts, and they expect supplies to start getting back to better, but not quite normal until next year.
It's an interesting one, Sid. We thank you so much for walking us through that story from Airbus to Safran to, of course, Boeing as well. And we also know that when it comes to the demand story for a lot of the airlines, we're keeping a very close eye on what happens in the Middle East as well and how that affects not only the airlines but other sectors as well. And I want to go there next when it comes to an update out of that region. Hamas says an Israeli airstrike in Iran has killed political leader Ismail Haniyeh. He was in Tehran for the inauguration of Iran's new president. Now, this comes after Israel said it killed a senior Hezbollah commander with an airstrike on Beirut in retaliation for Saturday's Golan Heights attack. Let's bring in our Horizons Middle East and Africa anchor, Jumana Bersetchi, all over this story. Jumana, bring us the latest.
Yeah, Kriti, a lot of developments in the Middle East the last 24 hours, but mainly a couple of hours ago, Hamas put out a statement saying that Israel had killed its senior political leader, Ismail Haniyeh, in an airstrike that happened at around 2 a.m. local time in Tehran overnight. Now, it's important to note here that there haven't been any official commentary or reports out of Israel yet, but the fact that it happened on Iranian soil is perceived to be quite escalatory. The reason Ismail Haniyeh was there is because the new President Pezeshkian, was being inaugurated yesterday. So he was there to attend the inauguration ceremony. There are actually pictures of him embracing President Pezeshkian from yesterday. And of course, today it is a totally different picture for the region and for Iran. There is a lot at stake for the Iranian president, especially given as he has been painted as a reformist president who wanted to reopen diplomatic ties with the West. This raises a lot of questions about whether he will be able to.
Yes, and Israel, I think, not commenting yet on, not saying, not confirming that this was their activity. But to your point about how he was killed in Iran, what kind of stage does that set for further developments here then, Jumana? What kind of response could there be to this, given that he was killed, as you say, in Iran?
Yeah, so the IRGC state-owned media have said that they're launching an investigation into the assassination. They will be releasing details in the next half an hour or so. But what they are confirming is that the airstrike did take place at 2 a.m. in the morning. Not only was Ismail Haniyeh killed, but his bodyguard was also killed in the attack as well. And just a short while ago, we actually did hear from the new president on his first day on the job saying, "We will defend our territorial integrity. Iran will make terrorists regret their actions." So strong fighting words coming out from the Iranian president. This alongside other comments from the region as well. Turkey put out a statement saying that they condemn the killing of the Hamas leader. Qatar, a key mediator with these ceasefire discussions, also saying that they condemn in the strongest terms the assassination of the head of Hamas. So a very sensitive, politically sensitive time in the region. We haven't had any official comments yet out of the U.S.
And Jumana, walk us through the market reaction here, because, of course, you are seeing oil a little bit higher. But when you put that to the broader context of some of the geopolitical risk we see, it's really only a one standard deviation move. Are we expecting more moves in the commodity space off this news?
Yeah, people often tend to look at oil as a sort of a release valve for geopolitical tension in the region. And certainly up until today, most of the geopolitical developments in the region had been shrugged off by oil, and they're pointing to the weakness of demand coming out of China, the fact that looking out into the second half of the year, the technicals are not so supportive. And yet, in the last 24 hours, what we are seeing is a bit of a bid emerge for oil. One thing that I do want to mention, though, is that Iranian oil production has actually been on the up in the last year. There's been more supply hitting the market because of an easing of sanctions from the U.S. So if this has the ability to escalate further in the region, and if the U.S. really wanted to come down heavy-handed on Iran, then they could think of perhaps introducing new sanctions or tightening up existing sanctions, which would have implications on Iranian oil supply, which is why we are seeing a bit of an impact on the oil market today. But for the most part, the last 6 months, oil has been shrugging off a lot of the geopolitical tensions in the region. One other area you need to watch, though, is what's been happening with Israeli assets, because for the most part of this month, the Israeli shekel, local bonds, dollar-denominated Israeli bonds had been doing quite well on anticipations of a Gaza ceasefire deal actually getting across the line. In the last few days, since the Golan Heights attack, what we've seen is some of that outperformance has come off, namely because, once again, people in the region are concerned about next steps and what happens.
Jumana, thank you very much. Jumana Besetcha with the latest on geopolitical developments in the Middle East and the impact that that is having on various assets. She talked there about oil and FX markets, so we'll leave that one there. Thinking about things that are moving this morning, we have had some movement now in the yen, Kriti, which is definitely of interest, given when we started this programme 2 hours ago, we'd heard from the BOJ, we'd heard that they were increasing interest rates and reining back on the bond buying programme, and we haven't seen it, well, we've seen volatility in the yen, but overall, net, it had settled pretty much unchanged. Now we're seeing the yen extending its gains against the dollar to advance by 1%. So finally, perhaps some of that hawkish messaging maybe getting through to markets?
Yeah, it's an interesting one because there was that believability issue that Mark Cudmore was highlighting earlier, that yes, Governor Ueda wants to be very hawkish, to your point, but is the market buying it, quite literally buying it? And it seems like, to your point, that it actually is. But a 151 handle is interesting because given they're still dealing with the capital flow story, and since we heard from Governor Ueda, we also got lines from the finance minister, Suzuki, as well, out of Japan, really talking about the fact that they're basically endorsing and pushing forward Governor Ueda's plan on the rate hike. And this is significant because in previous iterations of this, there has been some tension between what you've seen on the fiscal policy and the monetary policy out of Japan. So this is perhaps a good sign on that unity front.
And I wonder how much, this is strengthening the yen then this morning, and the weakness in the yen had been mentioned a couple of times by Governor Ueda. And so I wonder if the market is increasingly seeing that as something that is in the BOJ's sights. He said earlier on today that the weak yen is pushing up prices, and that's a key risk. He saw the weak yen as a risk for rising inflation. So on a couple of occasions, mentioning that link between the weakness in the yen and what that can do to inflation. So not wanting to see too much weak yen, it would seem. So that's where we are on the BOJ conversation, moving our way towards the Fed, of course. That's coming up. In the meantime, plenty of individual stock names to keep an eye on. We got a really nice update from Tom McKenzie earlier on around ASML. We've got this Reuters report that suggests there's some rethinking going on from the US administration about to what degree some of their Western allies, the businesses housed in these Western allies, will be caught up in chip restrictions to China. And that seems to be still fast moving, a Reuters report, as we say, but ASML certainly responding positively to that news in the short term.
They certainly are, and this is an interesting one as well. And when we talk about ASML in the face of some of that tech story, that's going to be crucial, specifically when we're talking about not only ASML and kind of digesting perhaps the read-through from the sluggish Microsoft earnings, which geopolitics seems to be taking over. You also have NVIDIA, for example, that recently got approval for a chip that they can actually export to China. So I'm curious how much of the read-through follows from Europe into the U.S. session.
Quick check on what's going on in the banking sector then, because we heard from HSBC today, and that stock doing well on the back of a $3 billion buyback. We heard from our colleague in the finance team saying that was a little ahead of market estimates. So the stock up by 2.8% now on its London listing. The second quarter pre-tax profit better than expected. Really outlining as well the way that the business can try to diversify its income sources. So it's not so reliant on net interest margin as rates are expected to come down. That's the sort of latest conversation there. But BBVA also in focus when it comes to the banking sector.
It very much is. And for HSBC, you mentioned that buyback story. I'm having a little bit of deja vu from the Standard Chartered story just 24 hours hours ago, BBVA has a very different one because, look, their net trading income did actually beat. Their numbers are looking fairly solid, and yet the stock is down. It's not just down 2.3%. It's actually down as one of your biggest index weights on the stock 600. And the reason I bring this up is because there's a couple of reasons why this could happen. They're also talking about their banking bid for Banco Sabadell is actually on track. So Tom Metcalf, in that same conversation with HSBC, actually highlighting that maybe there's a little bit of a believability factor here that's showing up in the shares, that this deal could actually go through. Bloomberg Intelligence, on the other hand, actually saying, well, yes, there was a net trading beat, but if you look at where that beat is coming from, it's actually some of the low-quality stakes that they have. So net, you are seeing BBVA shares down about 2.3% and weighing on the stock 600.
At the other side, end of the spectrum, Adidas is higher this morning, up by 1.4%. They're regaining momentum, it seems, with retailers on that Samba boom. Maybe that's where Guy Johnson is.
I was going to say.
He's busy stocking up on new footwear. Retail partners embracing this German brand. Again, and that's a boost to the relatively new CEO, of course. And this is a business still trying to turn the page, trying to reduce their reliance on the Yeezy brand, which had driven profits so substantially in recent years.
It's such a fascinating story that Adidas is actually going against the grain in the consumer story right now, because we were talking about L'Oreal earlier and their kind of sluggish growth globally, even though they had a little bit of strength in Europe. The conversation has luxury, not that I would put Adidas and luxury in the same category, but as a consumer, you are seeing the consumer kind of falling apart a little bit.
Yes.
Adidas bucking the trend.
Really interesting little nugget coming through from L'Oreal just in the last few minutes, actually talking about where is this weakness in dermatology, because Angelina Roscuret in Paris was telling us about this earlier, and I was thinking, but, you know, dermatology was supposed to be this big boom business. It seems it was sunscreen that's been the weak area for this business. And so, you know, you just have to look outside. I mean, it's sunny today, sunny this week, but it hasn't been for very long.
The Sambas and skincare and a little bit of airlines, this really does feel like it should be Guy Johnson's best day. So there's plenty going on the earnings front. There's plenty going on the individual stocks front. Let's talk about some of the macro data we've got our eye on as well. At 10 a.m. UK time, we've got that Euro area CPI. Again, that divergence between strength you're seeing in the periphery versus weakness in Germany is going to show up not just in the GDP data, but in the auction data as well. 7-year auction, about 3 billion euros, going to be hitting the tape at about 10:30 a.m. UK time. And then it comes right back to the earnings story, Anna, in the States. Boeing earnings pre-market in the U.S. session, Meta after, and then, of course, the big Fed rate decision at 7 p.m.
Absolutely.
UK time.
So with Meta, we're going to be looking for that, you know, that battle with TikTok as that continues. I was looking at some of the news flow there surrounding their chatbots on Instagram. That could be of interest tomorrow. But maybe we leave the last word with the Fed, because there, what we're looking for is, has the Fed got that greater confidence it needs in terms of having done the hard work on inflation, bringing it down? Do they feel comfortable to confirm to markets that they're ready to cut in September, or is it all about options open, keeping all of those options on the table?
Yeah, it's a really interesting one, and we're going to, of course, see how this market reaction shares, because as we speak about the Fed, and as we speak about the BOJ, basically digesting everything we have, dollar-yen still at 150. And I should mention, we talked a lot about the earnings story. Schneider Electric is one of your underperformers as well. We're actually going to get more of that later this morning. Peter Herwick, the CEO of Schneider Electric, joins the Pulse in the next hour. Stick with us. This is Bloomberg.